Hey, welcome once again here. Sauga 960 to Hard Money by Delta Harbour Assets. Anytime you want to reach out to Darren and the crew, have a chat, get started, get educated. Simple 1-888-335-8645. DeltaHarbor.com. That's Harbor with the U. Darren, how are you, mon frere, today? What's going on?
I am well, John. It's been a great week and lots to talk about on this show. I know we talked a little bit before the show about a certain topic we're going to touch on that I think is important for people to understand, but it's been a great week. I want to welcome everybody because the reception from last week's first show was amazing. It was incredible. It was unexpected. And we did this week. We hit a milestone for Delta. This is the first time we've ever done 400 plus ounces of gold sales in 1 week. And this is the week that was pushing us over the top. So congratulations to those that are in the market. Welcome to the new investors, the new buyers. And this is a show about hard assets. So obviously, let's get into it. We've got a topic we're going to talk, and I hope you're well too, Johnny.
Yeah, I'm doing well, man. It's good to see after the first show, it's already starting to resonate. People are waking up. They're getting educated. They're listening to the message that you're sending. It had been for years, but second show here on Sauga 960. And of course, you can find this where you get your favorite podcasts as well. Hard assets, you talk about it every week, whether it be gold and silver, some real estate, collectible cars, anything of that nature that's going to bolster your portfolio and do you some really good financial stuff over time is what we're looking at here. And it's good to get into it. In the coming weeks, I know, Darren, we talked about getting in, talking to people about real estate and collectible cars and all that fun stuff that you and we've talked for years about, we love. But we always like to just drill down right off the top about the prices of silver and gold this week. You mentioned a record setting for you guys, which is good at Delta Harbor. Give me some details about where we stand as far as those two metals are concerned.
Well, gold, silver, that's our mainstay. That's where we go. I mean, this is what we offer as far as precious metals are concerned for the most part, about 99% of the time. Gold this week trading in the 1780 range as we're taping the show, and silver back up to 26. These are US dollar figures. Of course, the world of precious metals works on US dollars, but both metals had some slight turnarounds mid to late week, primarily due to data in the US and in the bond market in particular, which we'll talk about, but yields fluctuating and starting to put pressure on interest rates. And we're going to discuss the topics of inflation and a few other things today, but ultimately gold and silver had a great week and continue to hold very steady. It's a building process, and we love the range. We want to buy this range. It is definitely advisable if you're talking to the people you trust, to share with them your ideas. If you're interested in getting gold and silver in your portfolio and it's physical that you're interested in, not paper, then we're here and we love it.
Yeah, you've often referred to in the past as, hypothecated gold and silver, where it's a paper sheet. It's nothing you can actually, weight down your hand with or put into a safe or under your mattress or wherever. This is actual physical metal, so that makes it all that much cooler as well when you're buying through Delta Harbor. Yeah, inflation. I mean, it's been a big topic for the last few weeks for sure. Give me some details. What road we're going down as far as that's concerned.
Well, as far as inflation is concerned, we started talking about it. I mean, it feels like a long time ago, but probably in the neighborhood of 2 to 3 years ago, we started really highlighting what was changing. And it's little things, John. It's never the big changes that occur. If you've been around and you've invested in these markets long enough, you'll have been through it. The 70s was the prime example where it creeped up on everybody. Interest rates had to go higher. Money was printed. Right. Mortgage rates went way higher. And we started to get used to that idea that inflation was becoming rampant. But the simple idea here of inflation is that something costs more. So there's an inflated cost, and it can happen for a number of reasons. I mean, today we're going to talk about a few of those drivers, but ultimately it's just the value of something going higher and higher, or the cost of something going higher and higher. And that can be for a number of reasons. But inflation is here. Mark my words, it's here to stay. The governments of the world, including our own here in Canada, are doing a great job trying to keep it at a very, very low minimum. But in fact, what they're actually doing is beginning to hurt the economy, because those numbers are now becoming very artificial. And we're seeing it in the real estate market. And we're going to talk a little bit about supplies to the real estate market today. But ultimately, it's just the simple way to understand inflation is by looking at something and it's priced a lot higher than normal. And, that's where we're at right now. We're starting to see things in food, clothing, supplies, raw materials starting to rise in cost, and that's very inflationary against what we have in our pocket to spend.
By the way, anytime reaching out to Darren and the team to have a chat, start investing these hard assets that are offered to you. It's simple, deltaharbor.com, harbor with a U, and 1-888-335-8645 is a way to do that. Drill down a little bit on some of the drivers of inflation. Is it always a bad thing or always a good thing, or it depends on the climate, right?
Well, certainly the government should have you believe that a certain amount of inflation is good. To clip along at 1 or 2% inflation on our major basket of assets that we buy every day, those things that we have to use in food and clothing, is healthy. It causes or relates to increase of population, the amount of people in the workforce. It certainly is related to your wage increases. Many people will have gone through or live in the 9-to-5 world where wage increases are normal, or we might have heard of COLA or cost of living adjustments. But when inflation gets above a certain rate, and it does get there many a times for very small periods, on certain aspects of the things we use every day and raw materials, food, clothing, things like that, it's not generally too harmful. But when it happens over a long period of time, for half a decade or more, and we start to see that process develop, it's usually the result of what is driving it, which is monetary, the way they set up the monetary policy in each country. You know, the U.S. leads the world, largest economy in the world. It's not far behind are the G8 countries, including ours here in Canada, but the U.S. leads the world. And in money printing terms, when you print that much money, like the U.S. has done, and we'll talk about how much they've printed, and here in Canada now, more recently in the last year, 400 or 500 billion new Canadian pesos being printed out here that are becoming worthless. You get the pressures of inflation creeping in and rearing their ugly head. And it's really it's become the elephant in the room, because instead of that 1 or 2% inflation, and the government tries to keep it there and they want you to believe it's there, you're going to see street level inflation now press towards 4, 5, 6%, wow, which means your wealth has to clip along at a higher rate than that. Your investments have to be on average making much more than that in order to stay even and have the same purchasing power. We love gold and silver for that. Mm-hmm. And B, this money printing, even if it goes into the institutions to begin with, and the banks bolster themselves and we put it towards business growth, the too big to fail institutions, and we support more recently like Air Canada packages and things like that, they have to play themselves out in other ways. So either that money has to hit the ground in loans, or it has to hit the ground in taxation to pay for that debt. Either way, these are all inflationary pressures, and we should be prepared for it. We should get ready, because we're seeing it now. Real estate, raw materials, food items. I mean, John, in the past, we've talked about shrinkflation, where we take away the size of the material or item we're buying in favor of keeping margins the same, profitability the same, but we're getting less for what we're paying for. And we're certainly not going to see governments pay any attention to the idea that inflation is higher than what they say, because this translates into higher wage concerns, which means that puts pressure on businesses to pay more to their employees. So it's all around us right now. It's kind of the topic du jour, and it's coming full stream into the mainstream. We bought an article from Global we'll talk about later in the show. It's all here.
Yeah, we're going to talk about that after we take our first break on the show, Darren. In the meantime, reaching out, write this number down, and when we're done, give the fellas a call if you just want to chat a little more about hard assets. If you haven't got that part of your portfolio up to where it should be, a good place to start would be to call Delta Harbour 1-888-335-8645, deltaharbor.com, and we'll continue with Hard Money right here, News Talk Sauga 960. Welcome back to Hard Money here with Delta Harbour, and the assets you want are hard assets. deltaharbor.com, harbor with a U, and reaching out anytime, 1-888-335-8645. Darren Long, once again, co-hosting, pal. Love having you here. Love talking about all this stuff. Now, we mentioned at the end of the last segment, we want to get into two articles, one that was in the Globe and Mail and one that you wrote. I know you've done a lot of this over the years. You write some good stuff. Break it down, Darren, what you wrote about this week. What do you got for us?
Well, we bounced around this topic of inflation a little bit, and surprisingly, a lot of the mainstream media are dealing with it now. And in particular, I picked on a couple of different things. I mean, in my article here on our website, and it goes out to our clients as well as those that subscribe to the newsletter. We called it "Wake Up and Smell the Inflation," because it's here. It's we talked in the first segment. Gold and silver eat inflation alive. They love it. It's one of the strongest assets you can hold in your portfolio in terms of wealth gains. And I look no further than what we experienced in the 70s historically to prove that. In the 70s, the prices of gold and silver respectfully went up over 2,500% in gold in 10 years and over 3,000% in silver in 10 years in the same span. And we've seen only but a little tiny portion, tip of the iceberg, if you will, in terms of from 2002 till now as to what gold and silver are capable of doing. There's lots more to come. And I talked this week about, in particular, the way that the governments are dealing with it. I mean, they want to keep a very, very close eye on where their money is at, and they're printing hand over fist, as we said in the first segment. Canada's prime example, $500 billion printed. I mean, how the heck do we pay for that? I mean, there's no. I mean, what's down the barrel is terrible. I mean, yes, we staved off elimination. We staved off the immediate impacts of COVID. Great job, everyone. Pat yourselves in the back. Let's stay prudent, as we were talking between segments about that. But ultimately, this is money that we have to pay back. We're not going to be able to pay it back. It's going to take 20 plus years to get rid of this debt that we've accumulated in 12 months. Now, if you look to the U.S., arguably it's much worse, and that money is going to hit the ground at some point. They've been involved in quantitative easing since 2008, since the financial crisis, and their money supply, the monetary money supply in the US, I mean, it freaks me out when I talk about it, because this is ultimately why I want gold and silver. I want those 10 plus 12 15% returns per year every single year on gold and silver, because the U.S. has taken their money supply, what took 300-400 years to create, John, which was at the turn of George Bush Jr., around $800 billion in money supply. They've taken that through Obama, Trump, and now Biden up to around $5.2 trillion in monetary base. And it's a science experiment. We're the guinea pigs, and it doesn't matter whether you live in Canada or the U.S. And the resolve of the government is, well, let's sweep it under the rug. Let's hide this as long as we can, because we don't want to impact the hot markets. What's the hot market? Well, we're talking inflation, real estate. So, I mean, ultimately this week we wrote about raw material. We wrote about the change in lumber, and lo and behold, so did half of the world in the media. You mentioned Globe and Mail. Global News did an article on it. And we talked about softwood lumber, and in particular, people are seeing the impact of that. I spoke with a contractor, somebody who's done work for me personally, and I said, "Hey, listen, I just want a small example of what's happening in the wood industry." And he said, "Sure. So, what were you paying for a sheet of wood last year?" And he said, "Well, let's talk about apples to apples." So we used West Fraser plywood, 3/4 inch standard size.
Cool.
And in March of last year, one sheet was approximately just around an average of $38 at Home Depot, one sheet. Fast forwarded to April here, and he paid 97 plus tax.
Oh my God, for the same
for that
wood?
same sheet. So it's gone up threefold basically in the span of 12 months. And a lot of people don't understand, but that's coming from the pressures of the U.S. housing market, not the Canadian. The Canadian is it's fear of missing out. It's a lot of resale. It's a lot of flipping of homes. There's not a ton of building happening on the personal front. There's still lots of new home projects happening, but in the U.S., the housing market is as heated as it's ever been. It's much worse than it was when the subprime hit. We're back into that, by the way, and we have been into subprime in the U.S. for a long time now. And ultimately, we're just following along as Canadians, like sheeple. You know, we're slaves to what's happening in this market. Raw material becomes more expensive for them. Hey, it's like they sneeze, we get a cold. It's the same thing here. Raw material becomes more expensive for us. And the government, they're going to do whatever they can to keep the effects of this inflation as low as possible. Number one, because money printing is something they need to continue to do. And I talk about it in the article. And two, because the housing market, which is the largest determinant factor in our economy right now, which is all over the place. It's as heated as it's ever been in the entire history of housing markets in Canada. That has to be kept in check. And everybody knows that it's overheated. But I ask those that are thinking of investing in real estate, would you rather buy a house right now using that mentality of the fear of missing out, otherwise known as, irrational exuberance, buying a stock at the top, thinking you're still got lots of room to grow? Or would you rather take a portion of that and put it into another hard asset, which is still undervalued, like gold or silver. When you have that option and you're seeing gold and silver take off from time to time, John, we've known each other long enough to know, there have been some years in gold and silver where the price of silver has ranged over 100% higher.
Yeah.
Last year was a perfect example. We went to a low of $12 and change. By end of year, we had hit 30. So, I mean, this is a market which can do that in very short bursts, very short periods of time. It offers tremendous return for people, and it is something that is very closely related to this topic of inflation. Inflation's here to stay. It's going nowhere. We are going to experience a very long bout of inflation, but right now, the government can't risk interest rates rising too fast, too high. But it's going to happen. Already look at those tremendously low variable rate mortgages that were coming in at 1% or just below 1%. They've already moved back up to 2%, 1.5% to 2% in a very short period of time. They've come and gone. So inflation's here to stay. Gold and silver going much higher.
You want to reach out, by the way, 1-888-335-8645, Delta Harbor with you, deltaharbor.com. And the thing naturally when we've talked in the past there, and the dovetails right into that, is loss of purchase power. We talk about that as well, right?
Well, purchasing power is the biggest thing, John. And I mean, I often connect with somebody, they're brand new to silver and gold, and they want to understand, what do we talk about when we're saying purchasing power, using this phrase purchasing power? Well, quite frankly, it's simple to understand. If we take $1 today and we try to buy something with it, we're going to be able to buy very little with it.
Right.
If, however, I took that same dollar and I wanted to put it into something, let's say 20 years ago, 30 years ago, I could buy much more with that dollar.
Sure.
And essentially, for lack of a better way to technically say it, that's our loss of purchasing power. That's inflation silently killing our wealth. So if we put money into a savings account, even if that savings account is paying close to the posted prime rate, because you've got a great relationship with your bank, you're getting 2 or 3% if you're fortunate enough. Even in these non-bank banks where you go to Tangerine or other, it used to be PC, President's Choice, you get slightly higher rates. Right. You're still losing because that purchasing power is decreasing due to inflationary pressures. And we look no further than the example of what we've talked about in the past, which is the 4-dime example.
Yeah.
In 1965, we stopped producing in Canada dimes which have silver in them. And this example extends itself to the idea that we can show what that over time buys purchasing power wise. So when we come back in the next segment, let's talk about the 4-dime example. You don't want to miss it, because we're going to show you why silver's held its value over 50 years and why it's such a great way to protect your wealth, grow your wealth in these times. And if you're thinking of getting into the market, now is the time.
We'll do exactly that. As we get into a break here, you'll want to reach out to Darren and the rest of his crew. Do so. Have a chat. Educate yourself. As we always say, it's the best thing to do right off the hop. To do that, 1-888-335-8645, deltaharbor.com as well. It's Hard Money right here on News Talk Sauga 960. Welcome back. Hard Money here with Delta Harbour Assets. You want to reach out. Hard assets is what we talk about on the show each week. If you've not expanded your portfolio to contain some of these, be it gold and silver, precious metals, or other things, which we will talk about in the coming weeks, start right now. Make that phone call, 1-888-335-8645. Really simple, and deltaharbor.com. All right, Darren, I love this. We've talked about this for years, and I find it really interesting. The dime example, talking about the loss of purchasing power. Tell me about it.
Simple example. We take 4 dimes, and in 1965, those 4 dimes were still made with silver. Mm-hmm. They had 80% silver in them. And 4 dimes in 1965 bought us, before we changed to the different measurement system, it bought us 1 gallon of gas in Canada. That was the average in 1965. If we fast forward to 2021, what does 4 dimes buy us? And again, this is the perfect way to identify what the loss of purchasing power is and why it's so silent. It's a silent killer of wealth. Inflation sets in even at the small government listed rates of 1% to 2%, and it eats away our wealth. And in 2021, you can't buy anything with 4 dimes. In fact, we've gotten rid of the penny. So over time, we look at that and we say, okay, well, tell me what's so important about knowing that there's silver in those 4 dimes. Right. Well, if I extract the silver out of those 4 dimes, silver's not at a peak. It's not at an all-time high. It's just sitting at around $26 US. But if I extract the silver out of those 4 dimes, which bought me a gallon of gas in 1965, guess what it still does in 2021? some 50 years later, it still buys me a gallon of gas.
Wow, no kidding.
So, I mean, 50 years of recessions, booms, busts, every type of economic climate you can think of, and silver's done its job to maintain my purchasing power. So if you ask me, what would I rather do? Have a savings account with 100,000 in it, or have a savings account with $100,000 worth of silver? My answer is the same every time. I'd much rather have $100,000 worth of silver. It's liquid, it's transportable, it can be shared, it's divisible, it acts like currency, and it protects wealth. And I'd much rather have that protecting my wealth right now while interest rates are as low as they are and they're giving me no value. And the fact is, John, that during this last 12 months, in talking about inflation today, we are going to have a burst of spending. Believe me, when we all get back to some range of normality, we're going to release the hounds. People want to go back to the malls. People are going to get back to their everyday lives. They're not going to be shopping online as much. They want to get out, interact, and we're going to see a flood of money hit the market. I say, why not be smart? If you don't need it, don't spend it. Instead, invest it. Do something that's better for you and your family. Buy and own quality hard assets. If you have real estate, hey, lighten the load a little bit. If you want to listen a little bit longer to this show, we're going to be talking about other hard assets. There's gold, there's silver, real estate. We're going to be talking about collectible cars. But in particular, John, this week, gold and silver, I mean, they've done exactly as good as can be expected for any hard asset category, and they protected wealth the entire time.
And I want to flip over because you've segued nicely, Darren, into that one. How to get some of these assets as far as gold and silver into your portfolio as well. Again, it's not paper. We're talking stuff you can actually hold. It's got some weight. It's beautiful to look at. You can store it. You can keep it on your person, in your home, whatever you want to do. But how do you go about doing that through Delta Harbor, pal?
It's pretty cool, John. First off, as you said, it starts the visit to the website. Maybe you want to go there first. deltaharbor.com. That's harbor with a U, and we say it because it's all about you, the investor, not us. And if you start there, you'll be able to read through some of our material, get an idea of the type of accounts that we offer there. Although we talk about all hard assets on this show and in coming shows, we primarily deal in precious metals, and that's our expertise, our area of expertise. It's physical, so you can take delivery of it. You can store it in a vault in your name, and be able to touch it, see it, hold it, and make changes to it by phone. You can put it in a registered account if you want to add gold and silver to a TFSA, RSP, a Lira. If you're close to retirement, you're flipping over your RSP, you can add physical silver and gold. It's easy to do, and still be able to buy and sell it by phone, trade it back and forth like any other type of asset. Or you can put it into bulk bullion. We have a program where you can keep the cost of buying to a minimum, get exposure to gold and silver, take delivery the same, and the option to just keep your expenses as low as possible is there. But you can get all that information on our website. That's the first place to start. We use a consultative process. We like to talk to people. It's important. In this day and age, I think we've gotten away from it, John. We do too much time surfing the web, looking at our phone, and we don't do enough speaking to one another. This is an opportunity to get on a phone. You're not going to get an answering system. You're going to get us, and you're going to be able to speak to our team here and ask questions about your wealth. And if we don't know the answer or it's out of our purview, we will certainly put you in touch with the experts that would be able to give you the answer. But as far as gold and silver concerned, that's the mainstays: direct storage, put it in a registered account, bulk bullion, or all of the above. And you can find that information on our website. We're all about service. That's what Delta Harbour stands for.
You know, you talked about be a physical gold that you can actually hold it and keep it on your person or put it in storage. So when it comes to the time, Darren, that, I mean, you're going to be collecting this for years, as you should. You should spread it out over time and build up a portfolio of these physical metals. If it comes to the time where I'm like, you know what, Darren, I want to sell a little bit of it, the difference between selling what you apparently own on paper versus a physical hard asset, what's the difference there?
Well, here's some of the news that's worthy of mentioning when it comes to paper, gold, and silver. Number one, most people buying gold and silver by paper think they own gold and silver. They don't. They own a unit or a share of a greater investment vehicle. Most often we find nowadays exchange traded funds or ETFs are the common one. There are a number of different ones there, but they own a share, a piece of paper, if you will. Those shares, pieces of paper, are traded on an exchange, and they are governed by the hours of the exchange. So if gold and silver are going up or down in after hour markets, because gold and silver trade 24 hours a day from Sunday night to Friday night, you can effectively alter your investment in any way, shape, or form. Once the closure of your bank or your platform or your exchange is done, you're done until the next day. So if gold and silver goes up 5%, you can't buy. When you own physical and you deal with companies like Delta Harbour, you're able to put in an account to have funds on hand to be able to use it to your benefit in all hours of the day. And you'll have a dashboard online, and it's again a consultative process. You can get in there, but when it comes to paper, John, the reason we don't like it is because it's too risky for us. It's somebody else's paper promise. There's a third party that's involved always in paper, and you have to rely on them to be have integrity and to be trustworthy. And we've seen it time and time again, especially in gold and silver right now, where there are numerous tests of these paper assets, which are ongoing and becoming very big problems for people around the world, because now investors want to see the product, and come push and shove, they're going to ask to see it. And lo and behold, they're finding out, no, you can't see it, you can't touch it, you can't hold it. You can only have the share or the piece of paper that we promised you when you bought the ETF or other type of investment. Same thing with mining stocks. They have their place, but if I want to have gold and silver, and my idea of owning a hard asset is to own the actual physical asset, why would cut out the middleman? Go directly to the supplier, Delta Harbour, buy physical product, gold, silver, bar, coin form, own it, invest in it, keep it liquid. It's bought and sold by a phone call, especially if you're storing it, and it's very simple to do. We'll talk more about it when we come back in the next segment.
You bet. Again, deltaharbor.com, Harbor with you, because as Darren says, it's all about you, the investor. The phone number, 1-888-335-8645. And while you're online as well, or making that phone call, do yourself a favor and sign up for the Premier Market newsletter. And of course, this podcast from this program can be found on Spotify and wherever you get your favorite podcasts as well. We'll continue. Lots more hard money is on the way. This is News Talk Sauga 960. And welcome back to Hard Money with Delta Harbour, deltaharbor.com, Harbor with the U, because it is all about you, the investor. We are talking about hard assets here, reaching out to Darren. Go to that website, or a member of his team for that matter, 1-888-335-8645. And Darren, we talked a little bit about inflation. We talked about how to get some hard assets as far as gold and silver, physical stuff in your portfolio, which is your bailiwick indeed, and that's where you want to be. Let's talk about real estate. I mean, there's no getting around it. It is another hard asset. A lot of people have in their portfolio, and I know you have your opinions, your thoughts, good and bad on that front. What do you say, pal?
Well, it's a sensitive topic, first off. So when you're listening here on the show, recognize that I don't come to this audience, nor does my team come to this audience to poo-poo on real estate. We love real estate. I think it's great. I think that it's done well for a lot of people. It's a hard asset, which I have owned and dealt in and traded and obviously live in a home. So we have our principal residence. And right now, I personally don't have any additional real estate in my portfolio. I've done away with everything here just because I want to be more heavy in other assets. But ultimately, its relationship to gold and silver is very important, John, and our listeners should know, because I bet you many of them are invested in real estate, either in their principal dwelling or in speculative property. But I think it is and should be part of a portfolio. Now, that being said, the problem with real estate right now is, well, and there are many, but the problem is people are running out. We've had COVID for a year, so we've had this exodus from the downtown core area.
Yep.
We've seen really the only area of real estate that has suffered is in a little bit in rental terms for condos downtown, and rental in values of condos downtown. Yep. Other than that, of course, because nobody wants to live in those big buildings while the threat of COVID is much higher in those places, they say. But other than that, of course, everybody knows the house prices are screaming through the roof. I don't have to give examples on the show. People already know what real estate is doing. But that being said, there's certainly a chorus of voices that is speaking out about the idea of how long this real estate boom can last. We are well above what 2017 brought in terms of peaks and pricing.
Yeah.
There is no community in Ontario right now that hasn't been hit by higher real estate prices, and that's dramatically speaking. And if we look across Canada, and there are a couple of areas in particular in Halifax and Nova Scotia, a few places in the east, and now back out west in Alberta, we're seeing home prices start to rally and rise and rally and rise. And people basically are still having that FOMO mentality, which is that fear of missing out on something. And I say apply that mentality to something that's undervalued. So if you're going to take real estate dollars and you're about to flip another house or buy into something you think is going to go multitudes higher, recognize that there's an end to everything. Ask investors in the late 80s what they thought about housing. They'll tell you that they thought that well into the 90s, maybe even the 2000s, if they were looking that far ahead, that housing prices were going to jump much, much higher.
Right.
But when the bust came and the economy didn't, it started to roll over and it didn't start to grow anymore, housing prices started to drop. And some of the biggest housing areas were hit the hardest, where they lost 20, 30, 40, even 50% of the value of a home. People were astonished, amazed, didn't think it could happen, but it has happened. And historically, that has occurred. I do not think, the only downside of real estate right now, I do not think that the average person should be investing in real estate too aggressively. I think that if they are smart, they've done their due diligence, they've talked to experts in the field, and they've consulted and have the money to spend and to lose, because that's a big possibility right now in real estate, then go ahead, delve back into that market, hold on to it for another 6-7 months, a year, and hope for the best. But I think we're near a top, John, and I don't think there is a soft landing coming. It's maybe a short period of time in which we're going to have that hard landing, but we're going to have in the next week or so, maybe even next week, an expert on. We'll announce that through our newsletter, but we're going to have real estate experts on this show to talk about it. In the meantime, if you do have that disposable income to spend and you are thinking about re-upping in new property or going into some new development, think twice. Spend 10 minutes, 20 minutes, an hour of your day consulting other types of hard assets, one of which should be gold and silver. They have a track record that's every bit as good as housing. Gold and silver, in the time that I've been involved since 2004, have both made tremendous amounts of money for people. In fact, price of silver has averaged between 10 and 12% a year in gain cumulatively, with some years being way, way beyond that. Gold, it's only had 2 losing years, John, since 2004. And ultimately, those assets have stood the test of time. Well before there was a housing market, there was gold and silver. Roman times, we're talking thousands of years. So we're not reinventing the wheel. We're just retraining our minds to think differently. We want to have tangible, hold in our hand assets paired with our traditional investments. So trim a little bit off the top. The real estate market cannot continue to go on this trend much, much higher. We're talking, multiples that are way out of the norm. Your parents, my parents, John, were buying homes on a single income at multiples of about 4 to 5 times their total income. We're now on average buying in the GTA and the surrounding areas of the GTA in Ontario, we're now on average buying at 8+ multiples higher, which again, with inflation, as we've talked about, with the way things have gone, with the greediness of the society, the way it is, we've pushed the envelope with so many different types of categories of investment and opportunity that it's pushed back on us. And now it's become very expensive. You're not going to see new home growth boom for young people, because if they saved up to avoid insurance premiums, if they saved up because they wanted to avoid going with private lenders or having any more increased risk, forget about it. In the last year, they've gone from having to save what was $20,000, $30,000, $40,000 to buy a reasonable home to double, triple that, just to avoid those pitfalls of home ownership. And if you are buying a home right now and you're going to live in that home as your primary residence, and you're only putting up 10%, 12, 15%, it's pretty easy to look at a picture that in the next 12 to 36 months shows housing dropping more than that, which means you're going to come up with a difference. That's subprime all over again. We're going to see foreclosures. It's going to happen. Get prepared for it and be prepared. But in the meantime, look for undervalued assets. Gold and silver, one of the most undervalued asset classes that you can put money into right now. And over the next 36 months, I would put them right alongside real estate easily in terms of what will do the best for you as an investor. And I believe silver in particular will kill everything. I think silver is going to hit in the next 36 to 60 months, high double digits, if not into the triple digits.
Again, reaching out anytime to Darren and his team, 1-888-335-8645, deltaharbor.com, Harbor with a U. And I mean, really, Darren, when you think about getting into the hard assets of gold and silver, it really is, it's a phone call, it's physical metal. There's really no extra math need to be done here. It's really simple. You get into housing, sure, you might do well, but there's down payments, there's renovations, there's closing costs, there's taxes, there's so many other things that, especially a new buyer, they don't see that. They just see granite countertops and their kids playing in the backyard. That's not the case. It's a really scary waters to be swimming in, I think.
Well, I look at it in terms of net gains, John. Before we go to break here, housing for me under normal circumstances does not have the net gain that everybody thinks it does from a dollar perspective. Right. Under these circumstances, if you're willing to take the risk, sure, risk can favor those that are, reward can favor those who take the risk. You can be bold enough to put the money down and spend it and develop or buy a house and hopefully sell it in 2-3 years. But ultimately, that risk can be spread around very easily. And in terms of hard assets, yes. Do you want to put your money into a market that's near or at the top or very close to it? Or would you prefer to buy something that's seemingly undervalued, that's still a hard asset that performs well under inflationary periods, that loves uncertainty, that does very well if the stock markets break down, does very well if housing markets break down? Gold and silver, that's where it's at. We can do that here at Delta. You can buy it directly. You can take it home with you. You can store it. You can put it in registered accounts. We have the bulk bullion accounts. And all you have to do is just get in contact with us to learn more and to actually make that happen for yourself.
And we'll do that after a short break, Darren. We're going to turn the spotlight back towards Delta Harbour itself and see what the advantages are of going with you guys. But to reach out anyway with a simple phone call, 1-888-335-8645, Delta Harbour, Harbour with you, deltaharbor.com. And while you're there, make sure you take advantage of signing up for the Premier Market newsletter as well. We'll continue with Hard Money. This is News Talk Sauga 960. Hey, welcome back to Hard Money with Delta Harbour Assets, deltaharbor.com, Harbour with you, because it's all about you. Don't you know you are the investor and you're the main focus of the show and the business you will take and do with Delta Harbour. 1-888-335-8645. That is the number. Write it down. Keep it. Take advantage of the Premier Market newsletter as well. Darren, let's throw it back to Delta Harbour, what you guys are doing, some of the advantages of dealing with you when it comes to hard assets and getting some of those into your portfolio, right?
Well, that's what it's about, John. Today we talked about in particular inflation as it relates to the market and what we're experiencing. And there's no doubt in my mind we are about to go through a fairly extended period of inflation. And whether this becomes a problem will depend on many factors, one of which will be how far governments are willing to go in terms of printing more money. So far, they've proven that they will continue down that route. But I think there is an end to every story that's being told. They tried, of course, a few years back in the US to cut back on the idea that more money printing was necessary. We talked about it earlier in the show, how the amount of money floating in the system, either digital or physical, is astronomical in comparison just 15 years ago. I mean, if we just look at the turn of Bush to Obama, it's gone up, from 800 billion in US dollars to $5.2 trillion. And here in Canada at home, the last year is going to tell the story and paint the picture for the next 10. The Liberals are weak. They don't have a plan. And I'm not suggesting other political parties do. Nobody envies the position that we're in as a country right now. But in the weekly article we talked about this week, I discussed the problems. We overspent. We have to stop now. We have to cut back. We have to make tough decisions. My colleague Lou Skizis, I talk to him on the frequent basis, but again, he's been a proponent over the years of not giving money out for free. And as a taxpayer, not being burdened by the idea that businesses are too big to fail. Let them fail. I'm sorry that we're going through this, but everybody has to share this burden. It shouldn't fall on the shoulders of the taxpayer. Small businesses are failing. We know this, but despite all of this, money is being printed hand over fist. Raw materials are rising in cost. Food is rising in cost. And we are about to unleash a ton of savings once we get through COVID into our economy. And for a very short term, it's going to boost our spending. It's going to bring valued return in the way of GDP to our economy. But we have to be prepared for this. We've seen this happen before. In the 70s, we experienced high bouts of inflation. It drove metal prices some 2,500 and 3,000% higher, respectively, in gold and silver pricing. And ultimately, it drove mortgage rates, it drove interest rates much, much higher. And you have to ask yourself, how does the world, or how does Canadian economy landscape, how does it look if interest rates, mortgage rates were to jump towards, let's say, even 5, 6, 7%? Sure, we make a little more money in our savings accounts, but ultimately, can you afford to pay your mortgage at 5, 6, 7, 8%? The answer is no. I already know we're going to lose a ton of homes to foreclosure. People are going to be devastated. And this is where we're heading. The short-term gains that we felt, or the protection that we've seen thrown at us as a society, and CERB and other subsidies that have hopefully helped people and supported our economy, those are gone in a little while. They're nowhere to be found, and we are going to be left to fend for ourselves. We have to get back to the grind. We have to put our heads down. We have to work hard. We have to develop new products, develop new businesses, develop new ideas. And as part of that, John, as we talked in the show today, we have to have quality hard assets in our portfolio. We have to have things that work for us. Gold and silver, 10, 12% per year, every year since 2004, cumulatively. That is better than almost every other asset class on average, even real estate. Yeah. We talked about the confines of real estate right now. Are we near a top? Will this be a hard landing? We think there are some things out there that are happening that are pushing us towards that possibility. And ultimately, with us, you get the opportunity to discuss these topics. We want people into hard assets. We want people into gold and silver.
You know, it's interesting too when you mentioned the real estate market and how risky it could be, especially for some new time buyers, first time buyers. There is talk of raising the stress test level, and if that flushes a lot of people out of the market, they're going to be looking for another hard asset to take advantage of, one that's undervalued, one that they should be looking at is right in the crosshairs of what you provide, right?
Well, it is. I mean, we talked about in particular, we do mention gold and silver, but silver in particular is extremely undervalued. In last week's show, we talked about just how cheap it was in comparison. It's half its 1980 value, and it's an asset which is used hand over fist in comparison to where it was in the 70s. It's the highest demand of any precious metal in terms of usages the world over, and it's growing dramatically. It's in everything we touch. It's in solar, it's in batteries, it's in clothing, washers, dryers, appliances, cell phones, electronics. And it doesn't matter whether we boom or bust. If tomorrow we woke up and a recession hit this economy, the average Joe is not living without his big screen TV, John. That's just the reality we face. Whether it's here or in Timbuktu, it doesn't matter. We're still going to be spending money on those things which silver is in. So in terms of the long-term picture, supply, demand, I mean, it's all coming together for a perfect storm, but gold also shares those same fundamentals. And at Delta Harbour, we spend a lot of time focused on consulting with our clients, telling them this story, teaching them about these things, and helping them understand that we don't have to put all our dollars into the traditional markets. We don't have to risk, if we're not comfy with owning real estate at this point, we don't have to risk all of it there at that time. We have other options, we have other opportunities, and we hope that it is through this show, our podcast, our website, and other various ways that we connect with the public, a way for us to showcase and highlight this opportunity that lies before people.
So last couple of minutes here to go. I know you want to go through once again how people can start building a portfolio with you, Darren, if they've never had the pleasure of getting physical, tangible, hard assets in their portfolio.
Well, John, again, to end today's show, number one, Delta is all about service. It is the most important thing that we can get across to a potential client. We are here to service you. If you're a small client, a large client, in between, it really doesn't matter. We are here to service you. You are the most important thing to us as a firm, and we exist because of you. So if that's what you're looking for, you want somebody to help walk you through this, that's what we do. That's the white glove treatment we offer at Delta Harbour. We form relationships with our clients. The feedback is that they love this. We have a lot of integrity when we're making decisions with clients, and we offer what we know to be the purest form of ownership for hard assets. That's the direct hard asset itself. So when it comes to gold and silver, don't risk owning other paper assets, third-party liabilities. None of that exists here at Delta. We go straight to the source. We get product from the mints around the world. It is the best product in the world, and you can own it, buy it, take it home. It's yours. Hold it in your own hands. Put it into storage with us if you like to have that. Make changes by phone. Easy to buy and sell. And if you want to put it into registered accounts or talk about our bulk bullion option to keep your prices down, then that is also an option. But it all starts, John, with people making that phone call and getting to our website.
And this is something you can also gift to your kids and family members. I mean, physical silver and gold, you can do it for several times a year, birthdays, Christmases, doesn't matter. You can do that as well because it's a physical product, right?
That's right. You can, and it's easy to do. We can teach you how to do that. Share it with the next generation,
Mhm.
establish it in your estate. Big investor, small investor, all the same options there.
Reaching out is simple. It's a phone number. We'll give you that one first to get a hold of Darren and the rest of the team. Here you go. 1-888-335-8645. Simple deltaharbor.com. That's harbor with you because the investing's all about you. They're just going to give you the roadmap and tools to do exactly that. Sign up for the Premier Market newsletter as well. And Spotify, iTunes, wherever you catch your favorite podcast. This show is broadcast for you personally there anytime you'd like. And we'll catch you next time on Hard Money right here on News Talk Sauga 960.